to the Money Mindset interview series. Thank you, Paul, for joining us today.
Hi, Rachel.
Hi, Paul. Would you want to share with us a little bit about yourself?
Well, I'm a cycloholic. Well, I like cycling. I'm an engineer. I have 12 years in the telecom industry, turned full-time investor, turned investing coach, turned business owner. So currently, I actually own two businesses. One is actually sort of like a entrepreneurship incubator. So that was started in October last year. And we basically incubate new startups who are interested, but they are brick and mortar startups and places like cafes, spas, and gyms and stuff like that. So we are like a mini incubator. And the other company that I've recently started was actually back to investment coaching. So that is called Ultimate Investing. And we actually coach people to do better in the stock market.
Wow. So I have a sense today's interview is going to be very, very interesting because we are speaking to an investor, investing coach and a business owner. So, and as you know, money is the, well, to me, like at least money is probably in the lifeline of every business. That's what everybody says. So maybe as a business owner and as an investing coach as well, you can share with us your views on what does money mean to you?
Money to me is just a tool. It enables you to get things you want and help people you want. But other than that, I don't attach a lot of meaning to money itself. Yeah, so it's just a tool to me actually. Yeah.
Okay, so money is just a tool to you, and being a tool, there will be things that you will activate, or rather, you will use money to do for you, right? So, what is your belief about what can money do for you?
Actually, I've always this belief that money doesn't make you better. In fact, money only magnifies who you are. So if you are actually a good person, it makes you better to become a better person. But if you are a person with ill intention and stuff, then it actually makes you even more evil. So that's my view on money. So it's just a magnifier actually.
Wow, that's a very interesting perception about money. You know that money is actually a magnifier on the person's character or personality. Yes. Is that through a personal experience that you can share with us, or how did that come about?
I heard it from somewhere and I start to reflect upon my life and stuff like that. And I realized that as I become wealthier, I actually not become a better person or a worse person, but actually it just makes me, it just magnifies who I am. So one advice I would give is while you gain money along the way, always make sure that you improve yourself as a person so that it actually magnifies the good in you. Yeah.
So when you say about the magnifying and magnifying the good in you, is there a benchmark as to well, especially for yourself, because we are having this conversation, what to you, what is good, and how do you how does one constitute, because you're talking about money magnifying the good in a person. So how does one determine whether it is good or not? Of course, it's very subjective as well. So yeah,
it is subjective. So maybe one example is, let's say if you have $100 and you have a very good heart and you believe in giving charity. So with the $100, you like to give 10% of that to charity. So you can give $10. But as your money grow, become $1,000, $10,000, $100,000, $1 million, you will still give that 10% or even more because you have the heart to do it. But on the other hand, if you are a person who just likes to accumulate money in your bank and you don't believe in giving to charity, so end of the day, right, you will just accumulate more zeros in your bank, but the people around you will not benefit. It's just a number that you're chasing. So that's my view on it.
Yeah, that's very true. That it magnifies, right? And because what you mentioned earlier is about percentage. So no matter how much the original sum is, be it $100 or $1,000,000, 10% of that amount is 10% of that amount. So
Yes,
yeah, whatever the base is, it gets magnified along the way. Yeah,
correct.
yeah, that's very true. So in your current accumulating all the experiences that you have along the way as an investor, as a business, as an investing coach, and as a business owner as well, what can you share with us, what are some of the money habits that are working out for you?
Mm, I've actually got one money habits, and I actually draw out something. So this is a pre-planned question. So thanks, Rachel, for that. So I've actually got something. It's a bit small, but I'm not sure whether people are familiar with this. This is called the six money jug concept by T. Half Ecker.
Uh-huh.
Yeah, so I've modified it along the way, but basically what he's saying is that you need to put your money in different compartments. And in my way of looking at it, I actually have six different bank accounts to do it.
Wow.
Because
Okay.
if you put it in one bank account, you will tend to dip into it more than you should. So basically, when money comes into my main account, I'll actually chuck it to six different accounts automatically by the percentage that I have now. So the first one is actually necessity. You see necessity here. So
Uh-huh.
and then the second one is education, and then long-term savings. FF is a financial free account for me because essentially I'm now more like a full-time investor. So that's my account for me to grow my wealth. And then there's always a play account and also a gift account. So some of these are pretty self-explanatory, but maybe let me explain two of them, which or three of them, which are very important.
Yeah.
So firstly is the gift account. So here is 5%. I guess everybody should set their own percentage. So for me currently it's at 5%. So every month I set aside 5% so that it can be given to charity of my choice, or I can help someone as I want. Because by helping people, right, it actually makes the value of the money become much more uh, significant for me. So my motivation is not to chase money, but the motivation is actually if I can earn more money, I can give more. Then there is this play account, which is very interesting because TF Ecker actually say that you need to set aside a percentage for it, because if you don't, right, you actually spend the rest of the 90% as a play account. So you might as well just set 10% and play. You can go for your travels and stuff and make it uh, fulfilling for you so that you will actually keep the other 90% for other things. Okay, so this two account is pretty interesting. Education is the other one, which I think is pretty important because end of the day, I think when you invest, right, first you invest in yourself. Even now as an investment coach and stuff, I still attended other people's courses and um, any workshops so that I can improve myself. Because always continuous learning is the best way to actually upgrade yourself. And so I also set aside for that. So the others is basically just a long-term savings and financial free account. So currently it's at this percentage. Yeah.
Wow. So I noticed you mentioned earlier that everyone should set their own percentages for
Yes.
themselves. And
Yep.
I'm actually curious because I've heard of this system before, but also because everyone's situation is different. So I'm
Yep.
curious, what are the benchmark, or how did you come around to determining those different percentages for yourself? What's the
I
consideration like?
Yeah, so I believe at first, T Health Hacker actually have some guidelines. But because example, when I was an engineer earning $3,000 a month as a fresh grad, okay, my necessity at that time is not so much. So maybe I only need 40% or 30%. But now I'm married, I have a house, I have a car and stuff like that. So my necessity actually increased, even though my wealth increased. So I find that with 50%, I can actually cover it. So there's no right or wrong in any of this percentage. There's only one wrong thing, which is if it adds up more than 100%, then something is wrong.
Definitely, right? Because when it adds to more than 100%, that will exceed what you earn.
Means you're actually overdrafting and loaning and stuff, so that's a no-no. So just make sure it's within 100%. The percentage will change as you progress along in life.
Cool, very cool. So how long have you been doing this, the separating into the jar? And you also mentioned that it's on a monthly automatic, right? You mentioned.
Yes.
So yeah.
No
So
human error.
sorry?
No human error, just gyro. And you cannot say at this one I don't. So it will just go.
Yeah. So how long have you been doing this? And do you have any motivation or any things that, because along the way sometimes we have emergencies, people sometimes have emergency, and they will start for a while, like it's like some habits, they start for a while and then they get derailed along the way. So just wanted to find out, how long have you been doing this, and what is your motivation that keeps you going at this particular habit?
I guess I learned this when I'm pretty young, so I've been doing it probably more than 20 over years.
Wow.
And derail, there are some times where you really feel that things doesn't work out and you need more things. But then always remember there is also there's a long-term savings. So this long-term savings, 5% is actually we call it emergency fund. Okay, it used to be higher, but now for me, because I probably accumulated a fair bit, so I can reduce it to 5% for me. So this chart system sort of have account for most of the situation. But let's say if really I need extra money, right, then I'll cut from probably the play account, just restrict myself from playing for 3 months and stuff like that, so that I can accumulate. But more or less, I'm pretty disciplined to that, because I believe this system really actually help you to grow your wealth, and also keeps a very good money habit. Because end of the day, right, when people come into money and then you actually don't know how to manage it, then a lot of time you'll be squandered away, or you have bad money habits and stuff. So this system probably has served me pretty well. Yeah.
Very good. So, and okay, I have to repeat this again. You mentioned that you have done this for 20 over years.
Mm-hmm.
Oh my goodness, that's a very, very long time to keep a habit, which is good. So, and okay, this is another sensitive question. You don't have to answer it if you don't want to. I can cut this out. But I'm just curious, because I'm an entrepreneur myself as well, and especially when it comes to running your own business, doing investing, and the payroll, the amount that you receive on a monthly basis actually fluctuates. And
Yes.
even that the amount is on a, cause I'm curious and I'm here to learn as well.
Mm.
Cause the amount that you put in percentage and it goes out automatically every month, if the amount that's coming in fluctuates for you, and this will apply to a lot of business owner out there, because every month their earnings may differ. So how do you
Yes.
manage that? Yeah.
So I was a salaried worker until I'm 5 years ago.
Okay.
So previously there was pretty much fixed income coming in, but now basically I will just so it's a bit different now. So I don't get my pay every month or something.
Yeah.
So what I did is because a lot of my income also come from investing and trading. So sometimes you got a good month and you get a bad month. So instead of stressing myself to sort of go after a number every month, which I think I know I need. But what I did is I actually average it out. So to about, currently now I'm doing it every 6 months. So that means every 6 months, then I pay myself in that sense, from my investing account, and even from my company where we get a dividend. So every 6 months, as long as my average is able to meet my obligation and respectively, I stick to the percentage. So I think the trick I learned is not to stress about it every month, but actually average out. Because actually in the long term, right, some months is bad, some months is better, but in the long term, things will work out better than if you have to stress over it every month. So this is something which I find is very useful.
Yeah, and thank you for sharing that. That's a very, very useful tip for a lot of business owners, solopreneurs, these people who, people even for trades like, or people
There's no stable income, I think.
yeah, there's no steady income. Like, for example, people with who rely on commission. and stuff
Even
like
real
that.
estate agents, yeah.
Yeah, that's true. Where their salary actually fluctuates from month to month, and taking a 6 month view, still implement what you're saying is still implement that tool, that habit. It's just that you expand it to a 6 month overview as opposed to do it on a monthly basis. Yeah,
Yes.
yeah, very good. That's very interesting. So, and also looking at money habits, are there any money lessons that you have experienced in the past and are open to share with us?
Mm, I think I will share from a point of an investor because I've been investing for over 20 years. As a business owner, I probably only started in the last 4 to 5 years.
Uh-huh.
So in investing, right, I actually uses two strategy. One is what we call the fundamental analysis. That means looking at business and how good the numbers are and stuff. And the other method I learned along the way is also trading. So using technical indicators. So for fundamental analysis, or sometimes we call it value investing, the key lesson that I have learned from there is actually there is no the the market is actually volatile. So in a way, the market is we call it a voting machine in the short run, but it is actually a weighing machine in the long run. So what it means is that stocks will fluctuate pretty much, even though let's say the company is doing well, prices will be depressed for certain reasons and stuff. So in the short run, is everybody participate in the market that they actually vote whether the stock will go up or go down. But in the long run, as long as the company has substance and is doing this good business and have revenue and stuff, in the long run, the business will do well. So it weighs the company. Or on the other hand, if a company is not doing well, right, in the long run, it will actually show. So some companies are more scammy than the others. And it will actually show in the long run that they will not last very long. So that's my take on when I look at it from a value investing point of view. But on the other hand, when I put my trading hat on, it's a bit different because for traders, right, you really have to believe the market. The market is always right, as we call. And there's this sentence that I always remember. The trend is your friend. Do not go against it. Saying that because sometimes when trading, you can actually long the market or actually short the market. That means you're betting whether it goes up or go down. The thing is, if the trend is telling you that it's going up, please don't go against it. Okay, don't use the contrarian theory in this scenario. It usually doesn't work. Okay, and when let's say the market is going down, then just follow it, short the market or don't do nothing, but do not think that you are so special that you can find something that you can go against it. So in that sense, to me, the trend is always right when it comes to trading. So these are the two sort of money advice I can give for people who are interested in investing and trading.
Wow, and that's based on your 20 over years of experience in investing and trading.
Yeah, and losing money too. So at the end of the day, it's not a bed of roses. Sometimes you win, sometimes you lose. End of the day, as long as your overall gain is more than your losses, then you are building up your assets. Then it's good for you.
Wow, amazing, very amazing. So I want to move on to talk about retirement, because a lot of times when we talk about money, it's being linked to retirement. So I want to, probably talk a little bit about retirement and what does retirement mean to you?
Mm. Looks like this question I have to disclose my age. um, I stopped working full time at the age of 37.
That's very
Um,
young.
yeah, people say that I'm retired. Actually, not really. Um, I still need to feed my family and myself and stuff. But at the end of the day, I'm fortunate that with my 20 over years of investing and trading experience, I'm able to have a certain sum of money that sort of is a safety blanket for me. And it allows me to actually pursue an alternative lifestyle of working. So let me explain how I work. So maybe this may apply to people. It's like, to me, there's no such thing as retirement, because if you try not working, right, I actually tried it. You try not working for more than 6 months, right? That means do nothing, be a beach bum, and just travel and do whatever, you'll find something is missing. There's this thing called fulfillment. There will be no more meaning in life. So I always believe that people need to keep working, to keep their mind active, and to have that fulfillment that you're craving for. Most people need that. So to me, it's like most of the time I try to schedule it such that I work half a year and I take vacation for half a year. Not as in that I don't work for 6 months. So basically, let's say if I work for 2-3 months, because for me it's quite flexible for me.
Yeah.
I can teach more, I can teach less, or I can actually tell my business partner, hey, I'm going on holiday. Can you take care of things for me? So I got very good partners. So let's say if I go for let's say a 1 month holiday. Okay, so during that 1 month, it's sort of my retirement because I don't really think about work and stuff. But when I come back, right, I actually work very hard. So I put it into these mini sprints. So in a year, so usually I'll go for about 2 long trips, a month or 3 weeks, and then 2 short trips, which is usually a week for vacation because I like to travel a lot. So by doing this, right, I actually sort of come in and out of retirement within a year. So that is my concept of retirement. And as long as I'm able and fit and still have the mental capacity to do this, right, I wish to do this until the day I die. Because I don't believe people should stop working just because you reach a certain age. Because there's always value that you can bring to the world and you can make it a better place.
Wow. And that's a very, very interesting concept of retirement. And because a lot of people, when especially, now that there's a retirement age, mandated by the government, we all know that, okay, retirement starts from this particular age. And I should stop myself there because before I dig a bigger hole with regards to the government retirement age. But I like the way you look at retirement. It's about scheduling a few months a year, and to
Yep.
you, retirement is a lifestyle, and you are able to choose what you want to do, and the times where you are working, you work hard, and the times where you are actually on holiday, you holiday hard as well. And those would be the few months, or those half a month for the whole year that you are actually in retirement mode.
Yeah,
And
so it's very funny because I like to post a lot when I'm traveling on Facebook. So my friend is saying, hey, you don't need to work. Every time you are always traveling. Let's say when I work, I don't post on Facebook because it's not so interesting. Right? You'll be interested of me looking at stocks, investing, looking at business deals and stuff. It's not interesting, so I won't be posting, right? So they have this misconception that I'm always like I'm fully retired, but actually it's not. It's a misconception.
wow, that's a very, very slightly different view of retirement, which is very special, I feel, and different, looking at retirement from as an experience, of course, but also, scheduling it, few months a year. That's very
And
interesting.
it actually makes it easier because I mean you meet any financial planner and they tell you that, oh, if you retire at this age, then for the next 20, 30 years, you need to set aside this sum of money.
Yeah.
And usually there's a huge sum of money. By using my method, you don't really have to, I mean, you plan long term, but you don't really have to look forward because you find things that you find ways to earn passive income or even active income, but not so stressful type that you can keep on doing till you are in your 60s or 70s. So you will not be like fully retired and you don't have to set aside a big sum for that because you know that you have the ability to earn the money even when you're at the age. So it makes the retirement planning uh, scenario much easier and much achievable rather than, oh, I need 3 million to retire, I need 5 million to retire. Actually, may not be true because it really depends how much you spend and how much you can earn even when you are not really fully working.
That's true, and it also fits into the YOLO mindset. Like a lot of the youngsters. Well, I say youngsters because they're really very young. I think I'm also showing my age, but the youngsters are really very young, where they have the YOLO mindset, and it's about the you only live once, and living the experience today, and not delaying until 30 years later when I retire. Then I will travel. When I retire, then I'll do a lot of things. So it's about mixing up both, and having the balance there, which is good, very good. So To end off the interview, the last question I would like to ask is, what is the best money advice that you have received?
I've received many money advice. Let me think.
Yeah.
I think there's one that really stuck with me,
Uh-huh.
and one of my mentor actually told me this. He say, don't chase after money. Just make sure that you add massive value, and the money will actually come for you. So I think that really has served me well in a lot of situations, especially when you try to become an entrepreneur, when you try to do full-time investing and stuff like that. Sometimes you're so stressed out, chasing your next dollar coming in, that you forget that money is just a tool. And end of the day, right, as long as you're adding massive value to people, people will appreciate it. And actually, they will actually pay you for it. So I think always come from the angle that I'm creating value for people. And don't stress. I mean, it's easier said than done, but don't stress so much about the money, because if you're really doing good, right, the money will actually come chasing after you.
That's true. That's very true. And that's a very good money advice. You know, don't chase after money. Just add value and money will come to you. Especially true for business owners, entrepreneurs, and you know, people who are doing freelancing and stuff like that.
Yes.
Yeah. So thank you so much for your time today. Is there anything else that you want to add to, you know, let our viewers know or share with our viewers?
No. I just want to say that the camera on my Dell computer is not very flattering. So if you're buying a Dell next time, please reconsider, because the positioning of that camera is actually at the bottom of the screen.
Oh my God. So should I cut this part out or should I leave it in?
Up to you, I'm okay.
This is very interesting. Okay, thank you so much for your time. And yeah, really appreciate it. Yeah.
Okay. Thanks.
Thank you.